Welcome to the award-winning show, Who Charted? My name is Manish Khatta with Dan Russo. Let's get after it, sir.
All right, 6 charts in 6 minutes heading into a holiday weekend. First chart I have is the 10-year US Treasury Notes. This is price. Everyone's watching. It's arguably one of the most important charts in the market right now as it relates to different trends and relative performance trends within the equity market. And it's as if it knows everybody's watching because it's decided to just basically sit there and do nothing. Trapped between a declining 200-day moving average and a rising 50-day moving average, dancing with a key level at 134. Now, perhaps the non-farm payrolls report for August will be the catalyst to get this thing moving, but right now it knows everyone's watching, so it's decided to do nothing.
Under 60 seconds. Nice. S&P 500 on the top with a 21-day breadth indicator and a 21-day volume indicator. I highlighted this chart on our previous episode because as the market was making new highs, you would see that the 21-day breadth and volume was consistently negative for the past couple months. What happened recently, it poked up above zero and it's now trending higher. This is what you want to see when the market is making new highs. You want to see these market internal indicators start to confirm those highs. If that happens and you start getting readings anywhere from 60 to 100, then this thing is going to scream higher, in my opinion, based on those internals. So this is good to see. It's a good tell for future market gains. And we're happy at least to get out of those doldrums of the negative 21-day readings. So positive in my book.
All right, I don't throw around the word textbook too often, but if I was going to describe a textbook uptrend, the S&P 500 Capital Markets Index would certainly fit the bill. As basically since October of last year, and these are the brokerage firms, these are the exchanges, pullbacks to the rising 50-day moving average or buying opportunities here along the way. It's kind of interesting to me because in a world where everybody is enamored with decentralized finance, the traditional financial markets and the traditional brokers and players in the game looks like a nice perfect uptrend to me. Relative to the S&P 500, legging higher above its own 50-day moving average and outperforming throughout the bulk of 2021. So capital markets, textbook uptrend on an absolute basis, outperforming on a relative basis. It's pretty much everything you're looking for in a chart.
2 for 2, under 60. Cap weighted. What's an example of how cap weighted dominates? This. You have the percentage of the S&P 500 above its 200-day moving average trending down since April, while the market consistently has been trending higher and making new highs. Why? Well, because a large percentage of the S&P is dominated by a handful of stocks. And this cap weighting, especially when it's in tech, that continues to roll higher, just adds more weight to why, sometimes breadth indicators don't matter, especially when you have such a large weighting. And so take it all with a grain of salt. Ultimately, price determines where you should go. And breadth does matter, but only if price confirms.
All right, this one's kind of interesting because it falls in the camp of we look at everything. We've been writing a lot about strength in the technology sector here in the US, but I think it's important to kind of find confirming data points along the way where you can. So the fact that the S&P European information technology sector is also in a nice steady uptrend above its 50-day moving average, to me, that's a confirming data point to strength in the tech sector globally. Now, Europe, not exactly known as a hotbed for technology, but this is a really good looking chart, steady uptrend. And what's interesting to me is that relative to the S&P 500, right, the US markets have been dominating everything. European tech is outperforming broader markets here in the US. So a bullish data point for technology in general, something that we've been talking a lot about, something we've been writing a lot about. So the confirming data point here jumped out at me here in Europe today.
3 for 3. Old TA heads love the value line arithmetic index. Obviously, if you want to get away from cap weighting, this takes the average of about 1,700 stocks spread across different indices. And as you can see, as the market was making a new high, it was concerning that the average stock was trending lower. That has now reversed, and it's actually close to making a new high. To me, I'm going to use the word textbook here. This is a textbook confirmation when you see something like a cap weighted or larger indices starting to make new highs and the average stock confirming. This is what you want to see for broad market participation. This is what you want to see if you are an equity bull. And this is what you want to see if you're fully invested and want to see the market go higher. So once again, another positive characteristic of what is continuing to be an uptrend in the overall market.
So that's going to wrap it up for 6 charts in 6 minutes today for Who Charted. Thanks everybody for taking time out to check us out. Don't forget to subscribe and hit the like button. We'll talk to you soon.
Thank you.